Hi, this is PR Sundar. Welcome to this special episode where I am going to suggest some sweeping reforms in stock market. And I hope both SEBI and other regulators, the government and exchanges will be watching this video, and let us hope they consider these proposals positively. First, introduction. So why this proposal? The first thing is that there is a news report that said now the futures and options volume in India is more than 100 times cash market volume. If 1 rupee is being traded in cash market, more than 100 rupees is being traded in futures and options market. This is very huge. In fact, this ratio between cash market and F&O market, India is the highest. And few years before, SEBI came out with some suggestions, and that time South Korea was the first one and India was the second one. But I think now India is number one. The ratio in F&O is very high. And out of this 100 times, more than 90 times is from options. Now the question is, how to reduce this volume? And in fact, SEBI is also bringing in lots and lots of changes with this aim only. So now I'm going to give some suggestions where the volume can be brought down in Indian markets. First, we will talk about the futures market. So in India, futures market, so you can trade in stock futures and you can trade in index futures. So what I'm thinking, SEBI should completely ban the stock futures in India. I think there are many countries where there are no stock futures. Yes, you may say, sir, I want to take a leveraged bet. And let us say, State Bank of India, the total 7.5 lakh. I don't have 7.5 lakh, I have only 2 lakh. I still can go long in futures, but cannot buy shares in State Bank of India. So this is not a correct logic. That is because not all the stocks in India, they are traded in futures and options. There are stocks which are not traded in futures and options, and there also people can take leverage. How they take leverage? That's called margin funding. Suppose if you have got 2 lakh rupees, your broker will give you another 6 lakh rupees as a margin funding, and you can buy the shares for 8 lakh rupees. Many countries in the world, the people take leverage position through the margin funding. Even in India, non-F&O stocks, you want to take a leverage, you can go for margin funding. So there is no need for futures market in India. One good thing, the people who lend the money to these people, margin funding, they will get some interest. And also somebody who has a full conviction that this price will go up significantly, then only he will go long in that. And because for margin funding part, he has to pay interest. Otherwise people, just 100 rupees they go long, 101 rupees they come out, So huge volumes are done like that. And even people without conviction also they are going long. So for going long, instead of future, one can avail the margin funding, can take the leverage and can go long. What about shorting? If there is no futures, then how to short? Yes, it is possible. Once again, in India, there are only about 200 stocks which are trading in futures and options. The other stocks, if you feel that the price will come down, you can actually go and sell the shares without having the shares. All you have to do, you have to go, there is a mechanism called stock lending and borrowing. From there, you have to borrow the stocks and you have to give the delivery. There is something good here. People, they just short at 100 rupees, 99 rupees, they square off, they cannot do this. If a person strongly believes that the share will come significantly down, then only he will short the stock and he will borrow from somebody to give the delivery. While borrowing, the lender will ask for some interest. So the short seller will be, if he has a good conviction that the price will fall significantly, it's more than what the interest that he is paying to the lender, then only he will short. Otherwise people, they just don't close their eyes and they short. And now that's what the people are doing. And also, if you see the last few years, and particularly in the last 1 year, FIAs left, right and center, they keep selling the shares. And it is the small retail people who saved this country. They put a lot of their money in mutual funds. And those mutual funds are coming and buying the shares so that the markets are not crashing. Usually, when the stock lending borrowing scheme comes into the mainstream, so usually the institutions, mutual funds are the ones having a lot of shares. They can lend to these short sellers and they can get some interest. This will become some additional return for the mutual funds. And if mutual funds are getting some additional return, so indirectly the retail people in India will get benefited. And this is what is happening in many countries. You want to do, you always have a way to do it. If you want to go long, go for margin funding. Want to go short, short and borrow from the stock lending and borrowing scheme. In major benefit in this is that the mutual funds will get some additional return. And people who invest, mutual funds investing in top companies, the dividend yield is very, very low. And also there will be lot less speculation in the market. And the stock futures trade only leads to lots and lots of speculation and lots of scams. I can tell you, even the Reliance Industries, there was a case and Reliance Industries wanted to sell the shares. There was a company called Reliance Petroleum. The company wanted to sell the shares that belong to the employees' trust. While selling the shares, they know that the price will come down. So there was a case in SEBI that says that the promoter used their binamis to short in futures market, and then after that they sold employee trust shares at one go. When the market fell, they squared up their short position in their Benami account. That case has been going on. I think that case was settled only last year, I think. There are ways people can manipulate it. So let us say one guy, wanted to sell shares. Let us say one guy want to sell 500 crore worth of HDFC Bank. What this guy will do, instead of selling the shares, he will slowly go short in future. Then what will happen? On the day of expiry, the put options will be trading at a very cheap price. He will go and buy the put option. He will go and sell the call option. And then in one go, he will go and sell the entire 500 crore worth of HDFC Bank shares. How they will sell? They will use the algo. 10 lakh worth of shares will be sold in the cash market. 10 lakh worth of shares will be squared off in the futures market. Market will fall drastically, but these people have nothing to lose. But then, they will sell call option, they will buy put option, they will sell the shares in the cash market, and correspondingly they will square up the position in the futures market. So this is possible. I heard that many people do like this, and that is why on expiry day there is a huge volatility. Not only in India, even in US, in 1 year there are 4 times expiry happens. All the 4: stock futures, index futures, stock option, index options, and they call it as a quadruple witching day. Why they use the word witching? A lot of expiry day volatility can be controlled by doing this. And the stock futures are the thing. Even Anil Dhirubhai Ambani also complained many times, there are some gangs which kept on shorting his stock beyond a limit. So that is one of the reasons why his empire has fallen. And if you watch some movies like Harshat Mehta, Scam 92 or something like that, also they say there are people, Manu Manek, those kind of people, they just keep threatening other corporates by shorting their stocks. Latest example I can give you, there's one company called India Bull Housing Finance. Suddenly one guy filed a case in Supreme Court. India Bull Housing Finance cheated 1 lakh crore. Then the immediately market cap has fallen 10,000 crore. Then you want to see who is that guy? That guy is a milkman having 3 shares. And that guy also after 2 days says, no, I never filed any case. Somebody forged my signature. And all kinds of scams. And if there is no stock future, this can be controlled. I'll give you one example. Let us say you have 1000 crore with you and I have 1000 crore with me. And we both are real estate companies. We both want to buy a big parcel of land in Chennai that costs 2000 crores. And what happens? So you also bid for that, I also bid for that. So finally I paid 10 crore more So the land has come to me. So the land has come to me, 2010 crore. I have only 1000 crore with me. I pay the 1000 crore. The remaining 1000 crore I borrow from a bank by pledging my shares to the bank. I'm happy. Then you lost the game, but you still have 1000 crore with you. What you will do? You will keep on shorting my stock in the futures market. When you keep on shorting, my price will keep on coming down, and that will create hell lot of problem because the banks. I gave the shares as a collateral. That collateral value will keep going down. I'm not saying that this is happening, but there is a possibility that this can happen. And actually, even many people ask me one question, sir, cash market drives the futures market or futures market drives the cash market? Definitely, when somebody keep on shorting in futures market, then who want to buy in the cash market? So definitely, logically speaking, cash market should drive the futures market. But in India, there's a possibility future market driving the cash market. All these the problems can be solved in just one go. No stock futures in India. So this is about futures. Let us come to options. Options, there are two types of options, call option and put option. One can sell call option only if he has corresponding shares in his demat account. Otherwise, one should not sell call option. Let's call covered call. For speculative purpose, no call option should be sold. The same way, put option can be sold only if you pay the full margin money, which means that it's a cash secured put. So no margin money, it's a full margin money you have to pay. Then only you can sell put option. And then, in case if it comes below, you have a full margin money, so you can take delivery. So if this rule is brought, then there will be no people left, right and center selling call options and put options. So number one, no stock futures. Number two, call option you can sell only if you have shares in the demat account. And number three, you can sell put option only if you have the full margin money in your account. Then people say, sir, you are talking as if we have to close the stock market. Sir, some speculation is required. People need to speculate. They must have a way to do it. Yes, I am not denying that. Whether you are an option buyer or whether you are an option seller, you need to have some kind of avenue for your speculation. And basically, I am also an option seller. I am also an option buyer. So why should I speak against my own business? And here is where I am differing. I am not saying that exchange should completely close down the futures. I am saying futures should be closed only for stocks. You want to speculate, you speculate only in indices. You want to buy or you want to sell, you buy Nifty options, Bank Nifty options, Fin Nifty options, IT index options. There are so many options are available. An index being an average of so many stocks, manipulation is very, very difficult. Even the SEBI as well as other regulators also know that, trading in indices has much less risk compared to trading in stocks. Though people want to speculate, we can channel their speculation to low risk instruments rather than high risk instruments. If this rule is brought in India, then I'm sure lot of scams can be avoided, and it's really good and healthy for stock market, and people will be forced to trade in index options rather than stock options. And also this will give some additional revenue for mutual funds. Hope you enjoyed watching this video. Thank you for watching.